Hi, this is Bitcoin Asset Research with Allard. Today I'm going to talk about MicroStrategy or Saylor hitting the ATM as it's sometimes described. Many people have their own explanations amidst frustration with the current price action of MicroStrategy, and most have no idea what MicroStrategy is actually about, and it definitely goes to show within the discourse. Even the investors who are long don't really know what this company is actually doing, and I'm just here to clear up what is going on with this quick video. So just to set the stage, ATM means at the market offering. This is basically issuing equity and diluting the current shareholders for the company to get some cash. In MicroStrategy's case, they take this cash and they buy Bitcoin. And everyone knows this. Now here's some further context. They did a 21-21 capital raise plan announced on the Q3 earnings call. And we can see that over here. 21 billion raised for fixed income securities and 21 billion raised with ATM equity offerings. So far, only $3 billion of convertible notes have been issued. And that's in contrast to roughly $13 billion worth of ATM issuance. As you can see here, as of December 15th, 2024, approximately $7.6 billion of shares remain available for issuance. So of the $21 billion, only $7.6 billion remains. About $13 billion of the ATM has been spent. Michael Saylor is also seen here tweeting that orange dots on Saylor Tracker are motivational. And for the last few weeks, he's done cryptic tweets like this. And it always portends to some kind of giant announcement of Bitcoin purchases where the proceeds have been ATM. So I'm just bringing this up to show that even though as of December 15th, only 7.6 billion remains, very soon within the next week, that number will probably be more like 5 billion or 4 billion. And then to further set the stage, you have MicroStrategy's price action. The 6-month chart is pretty good, but when you look at the 1-month chart, it's been very choppy / trending down. This is getting a lot of people very nervous. Now, people think the ATM is holding down the stock price, and this definitely makes sense. Like if someone is just selling a massive amount of stock, billions and billions of dollars of stock, that's going to hold down the stock price. And that has been the cause of quite a bit of frustration because investors obviously want the stock to go up. And they're saying stuff like this: Saylor needs to chill on the ATM. He has to let the stock go back up, and he is killing the momentum and alienating the shareholders. And this doesn't really make much sense because Saylor himself is the biggest shareholder. Some think the ATM is good for these wrong reasons, and we'll just go through them real quick. He's trying to front-run nation states. This is definitely wrong. Everyone's trying to front-run nation states, but that's not the reason for using the ATM. The ATM is better or faster for acquiring Bitcoin. This doesn't even make any sense. He's trying to wash out the tourists. This is definitely an impact of the volatility, but it's definitely not his intention to do something like that. Let's set the record straight about what's going on. So volatility is the real product that MicroStrategy, the company, is selling. This is what most of the convertible bond investors are looking for. And really, I just encourage you to watch my video on this that I did. This was my most recent video. This is how MicroStrategy convertible bonds make money, where I go through the principles of volatility arbitrage. So if you're talking about what Saylor needs to do, Saylor needs to make the stock go up and down very, very violently. This is what volatility is: very violent up and down motions of the stock. If this ever stops, if this volatility ever stops, then the volatility arbitragers get wrecked and the game is over for the convertible bonds issuance business. This is what a lot of people do not understand. This right here is the demand side of these bonds. If the volatility stops, and you watch this video, I cover exactly how these bond traders make money from the volatility. If this volatility ever stops, the game is over. And this means no more borrowing at 0% interest rates. It means BTC yield will come exclusively from normal bonds, and that would be borrowing at over 5%. Over the risk-free rate, and from at-the-market offerings. So if you consider what this means for even a moment, you find that the business value collapses to Bitcoin Treasury plus software business. Functionally, what it would mean is a scenario where MicroStrategy's Bitcoin investment bank business is no longer viable. I've argued in the past that MicroStrategy is Bitcoin's only investment bank. This was the video on that. MicroStrategy, this view changes everything. Essentially, the view is that MicroStrategy packages Bitcoin securities and exports it to various corners of the financial markets, and then takes those proceeds and gives it over to Bitcoin. So when you consider it that way, the investment banking business is really this way of chopping up the risk and return profile of Bitcoin into these acceptable securities that are then sold to investors who specifically want that kind of exposure. And volatility arbitragers who are using these convertible bonds, they happen to be the biggest source of demand for these securities. So if all of a sudden their needs are not being met because the stock itself isn't volatile enough, then that is game over for this investment bank business, which means the business value automatically collapses to just the Bitcoin treasury plus the software business. And we all agree that the software business doesn't really have that much value. So it would mean that MicroStrategy is overvalued by quite a bit if it has to collapse down to NAV. Now, if you're learning something so far, I just ask you to like this video, subscribe, share it with a friend, leave a comment, leave some kind of question. I'm super responsive to these. Help me expand the reach of these videos and help me make the videos better with your feedback. I'd really appreciate it. Now, why use the ATM so much right now? Right? This is the question that's on a lot of people's minds. Well, there's really two purposes here. The first is to generate realized volatility in the stock. And again, this goes back to the business model. That stock needs to be moving. If it doesn't move, then the volatility arbitrageurs don't get paid, and it's just game over for the whole convertible bonds business. So it has to generate volatility. If the stock's been going up like this, it needs to start going down like this. There's no other way around it as long as this is the current business model. If you are invested in this business, understand the business that you invested in. They are selling volatility. And if you're not okay with that, then it's always okay for you to just sell the stock. Now, here's number two. Here's the second reason for using the ATM so much. It builds up the Bitcoin NAV without taking on debt. And you could think of this as increasing the price floor of the stock. There's really two ways you can shrink the premium to the NAV. One is to add more Bitcoin to the treasury, and the other is for the price of the stock to actually fall back to the value of the Bitcoin treasury. If you're adding Bitcoin to the treasury, then you're raising that floor price, and that's really helping accrue value in some sense to the shareholders. Also, on this point, you have to understand that all the bonds and equity are ultimately backed by the Bitcoin on the balance sheet. The more Bitcoin comes from debt, the more leverage and risk there is. So let's just talk about the black swan risk for these convertible bonds. This is really what it would look like. The stock has an extended drawdown. The bonds don't convert because remember, the bondholders have this option to convert the bonds to shares. Now, if they don't do that, then MicroStrategy has to pay back the full principal on these bonds. And then let's say that if this happens, nobody wants to lend to them. So they're not able to come up with more cash to pay up this principal. So their only recourse would be to sell the Bitcoin they have to pay the principal. This would be very, very bad for the stock. It would probably also happen in a Bitcoin bear market too, because you have to think, why would the stock be in such an extended drawdown? Well, it's probably because Bitcoin's in this bear market. And if Bitcoin's in this bear market, then they're going to be selling a lot of Bitcoin to cover the principal. And that's going to be a lot of negative BTC yield. And that's going to be very, very bad. So the more Bitcoin you buy without issuing bonds, the less of a problem you have. This entire black swan risk, it becomes mitigated. Now, if you have a bunch of Bitcoin that you bought with equity, then you'd be selling a smaller portion of that stash in that worst case black swan scenario. And equity in this case would be at the market offerings or retained earnings, although MicroStrategy does not really have retained earnings from business operations. But note that if it's all bonds, then the black swan scenario will quite literally cause you to sell the whole stash. So equity buys equals less risk, and this is always the case. So bond investors also know this. They do want the volatility. Again, they're volatility arbitrageurs. They want that volatility, but they also want downside protection as well. And that comes from the larger base of assets, which can be liquidated if needed. So that Bitcoin that's purchased, that is really what is backing up the value of those bonds. That's what allows the bond investors to be confident that they can definitely be paid back. And currently, MicroStrategy has $7.9 billion in convertible bonds. We can go over here and look at the different tranches of convertible notes they have. And if you add up all of these principals at inception, and you also add up the $3 billion that was raised over here, you would get about $7.9 billion in convertible bonds. And currently they also have $43 billion in Bitcoin. So this is almost 6x collateralized. Another way you could think about it is Bitcoin could fall to a sixth of its current value, and MicroStrategy would still be able to pay off all of these bonds, assuming none of the bonds convert. Now, before that $14 billion ATM being used, remember we looked at it and we saw there's only about $7 billion left, so they spent about $14 billion. It was only 4x collateralized. Take 43 billion, you subtract 14 billion, get about 30, and 30 is just about 4x of 7.9 billion. So here might be your next question, right? So we answered why the ATM is used so aggressively right now. Why not use the convertible bonds concurrently? Like, why not just do both of them at the same time? Okay, so let's cover this reason first. The concept of under-promise, over-deliver. This is something that all the good CEOs do. They don't want to promise something too much, and in fact, they want to promise something that they can definitely deliver on, and then they want to over-deliver on it and basically beat expectations. So what were some of the promises, and what are they going to try to over-deliver on? Well, you can see here, this is some of the promises. They have this new target for Bitcoin yield. Originally, they were targeting 4 to 8% Bitcoin yield, like annual Bitcoin yield for the next 3 years. And this was 4 to 8%. And now they revised it to 6 to 10%. Now, let's think about what would happen if they blew through the entire $42 billion plan. They wouldn't have much ammunition to immediately generate BTC yield, because convertible bonds are the most efficient vehicle for generating Bitcoin yield. First off, you get a bunch of money up front. The conversion premium makes it so that you're effectively selling shares at above the spot price, and you're also monetizing the volatility of your equity. So you're just getting much more money up front so you can buy much more Bitcoin. So the convertible bonds is really the engine by which you can generate a huge amount of Bitcoin yield. If I was trying to do under promise and over deliver, I would save up all of those bullets to be used in next year, because this year the BTC yield is already quite great. But next year, who knows what's going to happen? So I want to save that ammo now, and I want to use the tool that gives me higher Bitcoin yield next year, so I can immediately over deliver on that promise. I can say, hey, look, we targeted 10% BTC yield. We achieved that in Q1 of 2025. That would be definitely over delivering on that promise. So this is just like a common strategy that corporations use. But more importantly, okay, like let's look at the economics of what's going on. More importantly, implied volatility sucks right now. The sell-off in the stock came with a collapse in implied volatility. And implied volatility means bad terms for MicroStrategy when they issue convertible bonds. Let's just look at implied volatility real quick. That's November 21st when they issued their last $3 billion of convertible bonds. And you can see the IV30 over here. That IV30 is 213. So that's 213 vol right as the stock was surging. Surges in the MicroStrategy stock price, that coincides with surges in implied volatility. And surges in implied volatility coincides with higher bang for the buck on the convertible bonds. This is November 21st when the implied volatility effectively peaked. And here you have November 21st. This is when they did their $3 billion convertible bond raise. So I hope you can start to see where the consistency is. It's not about using the convertible bonds indiscriminately. It's about looking at when the implied volatility makes sense to enter these things. Now, higher implied volatility, that also allows you to do a higher conversion premium, which gives you a higher BTC yield. Why? Because a higher conversion premium means that there's going to be less shares in the fully assumed diluted shares calculation, which pulls this denominator down because BTC yield is change in Bitcoin per share. And if assumed diluted shares is lower, then denominator goes down, Bitcoin per assumed diluted share obviously goes up. So it gives you a higher BTC yield. So all of this comes back to timing the volatility. It's not about timing the price of Bitcoin or anything like that. Like that's been very, very clear. And this is also why front running the US strategic reserve concept, this is just misplaced hopium at best. It's all well and good that you believe a US strategic Bitcoin reserve is happening, but don't think that they are doing this just to front run the US strategic reserve. Saylor has repeatedly emphasized that he's not trying to time the market. He doesn't think anyone should try to time the market. He's just trying to buy it, but he's trying to buy it judiciously, using the right tools for the occasion. And here's the thing, just to support my own argument here, if you only cared about the speed and volume of Bitcoin buys, it is much better to do both at the same time. It's much, much better to do the ATM and convertible bonds at the same time, because that's the only way you can maximize how much money you want. If you truly thought you were front running imminent, like inevitable nation state adoption that happens in the next 3 months, what you should do is you should just take out whatever money you can get and then just buy it like there's literally no tomorrow. But this isn't in fact what they're doing, right? So they aren't front running any of this imminent nation state adoption FOMO stuff. Like that's just not the consideration that they're making. MicroStrategy has proven incredibly judicious about how they play this game, and it is a gamma game, okay? I'm gonna say it again, it's a gamma game. They need to manufacture volatility within the stock price. They need the stock to go zigging and zagging like crazy. We've all heard this before, volatility is vitality, but it literally is, because it's actually the lifeblood of the business. It's like saying teddy bears is vitality for Build-A-Bear Workshop. Teddy bears is the business. It's the same thing. Volatility is the thing that is being exported. So if you're the shareholder, you need to be comfortable with volatility. And here's the last question after all of that is covered. Will there ever be a point where volatility isn't so make or break and vital? Because right now we are at a point where, as a shareholder, you better be okay with your shares fluctuating up and down by quite a bit. In fact, if you're not okay with it, it's equivalent to you saying you are not okay with the business model of the company you are invested in. So the question now would be, will there ever be a point where I don't have to live with this level of forced volatility? And the answer is yes, but not if the biggest securities buyers remain these volatility arbitrageurs, right? The arbitrageurs, they're going to need high realized volatility. And as long as they need that, well, that's what the business you're invested in, that's what that business better provide. So now let's think about, like, is there a point where the biggest buyers of these securities are not volatility arbitrageurs? Well, in some ways there is. Because now you have the indices, we just got NASDAQ 100 inclusion. Now you have indices and index funds, they're going to be the buyers, but they're only buying MSTR, the common stock. So this is good, but it doesn't fully meet our needs. Now the next thing is really preferred stock and normal fixed income. Now the problem here is the cost of capital for both of these things and the impact on cash flow is going to be much higher. If we're talking about normal fixed income, there's no conversion feature. You're probably looking at interest rates north of 6% annually. If you're talking about preferred stock, well, that's a whole different set of covenants that the company has to structure and then communicate with preferred stock investors. These things are going to create this cost of capital that is going to be much more expensive than convertible debt, because convertible debt, like, you're paying 0% interest. But this is really the thing to look at, which is convertible bonds being bought for upside exposure. MicroStrategy's convertible bonds are actually doing really, really well. And a lot of these buyers are volatility arbitrageurs, but when you have bonds that do this well, where they're literally beating Bitcoin by a huge margin, maybe you'll have bond investors start to come in here and be like, I might just want to hold these bonds and not even do any of the volatility arbitrage stuff. And if that becomes the demand, then now we're in a very good situation where, yeah, we don't necessarily need the stock to have so much high realized volatility to service these volatility arbitrageurs. So let's just close off with this. For now, the volatility does unintentionally wash out the tourists. And this is actually a huge benefit for investors who actually understand what's going on. Weak hands are going to give the shares to strong hands, and it's going to be at good prices for the strong hands. And it's the same way with Bitcoin, right? If you don't like the volatility of Bitcoin, just like if you don't like the volatility of MicroStrategy, you can always just sell the asset. It's just that you would miss out on any possible upside, so you have to be okay with that. It's like anything in life, there's trade-offs to it. If you like Bitcoin, I think really you would love MicroStrategy. This is a company that is constantly buying Bitcoin, growing Bitcoin per share, monetizing the aspects of Bitcoin that Bitcoin cannot monetize for itself, and it's doing it in a very, very innovative way. But of course, you're going to have to live with volatility, and that's just part of the game right now. If you enjoyed this video, hit the like button, subscribe to the channel, leave a question or a comment or a suggestion for a future video. Thank you so much for watching, and I'll see you in the next video. Bye.